I think what happened here is the Fed just pumped tons and tons of liquidity, and we stayed high for about a year and a half. And I remember when Jerome Powell said, "I'm not even thinking about raising interest rates," and said strongly that it'll be till 2024 before interest rates start coming up again. But here we are in 2022, and now instead of raising them a quarter point, each time, now they're raising them 75 basis points. So they're taking 3 steps at a time, multiple times. So we took the cost of money down faster than any time in history, and now we're jacking up the cost of money faster than any time in history.
Hello and welcome to Wealthy Value. In today's video, Bitcoin enthusiast, billionaire and Microstrategy chairman, Michael Saylor reveals the major reasons why crypto and everything else has crashed in 2022, the impact of policy wars on inflation, and his thoughts about fiat currency and government intervention in crypto. Make sure to stick around till the end of this video, where Michael Saylor admits why Bitcoin is 100 times better than gold. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
If we look at the past year, what you've got is a drawdown of all financial assets. So the NASDAQ is down about 22% over the past year. And so NASDAQ represents tech companies and all the risk assets. But on the other hand, if you were to go and look at like the bond market and the bond portfolios, bonds are down, like the BOND index, the long bond index, it's down almost 17% in the year. So for 30 or 40 years, you had this 60-40 bond portfolio, and the idea was
bonds were considered a safe space.
The idea was if stocks work, then bonds will be a low return and stocks will be a high return. But if stocks trade down, people will shift their money to bonds, and the interest rates will go down. The bonds prices will go up, and you'll actually get a yield on your bond portfolio. But of course, that broke around March of 2020. And the reason it broke in March of 2020 is because interest rates got pegged to 0. So after we had lowered interest rates from 5%, 5.5% to 5 to 4.5 to 4 to 3.5 to 3 to 2.5 to 2 to 0, and left it at 0, then the debate was, can they take interest rates negative? If you can't take interest rates negative, then bonds don't act as a hedge to stocks anymore. I mean, you're at the end of the road for bonds. And what we saw with stocks is the Federal Reserve printed a bunch of money, pegged interest rates at 0, and then you saw all these risk assets explode. You saw the NASDAQ explode up and the S&P explode up. You had a K-shaped recovery. And in the K-shaped recovery, it's almost like the entire economy was in a train wreck or in a car wreck, and we got taken into the hospital and they pumped us full of morphine. And if you've ever been in a bad accident, and then first you're in pain, and then they pump you full of painkillers, and then you actually feel pretty good. And you're sitting there and your arm is broken, but you're high on morphine or high on something, and you feel pretty good about it. And you're thinking, why don't I just go break my arm and do this all the time? And then at some point, there's part of your brain that says, I'm going to come home from the hospital and I'm going to get off this painkiller, and I'm going to be in great pain for the next 3 months or 6 months or whatever it is. When a government declares a war, they basically put public policy initiatives ahead of the interest of the free market, right? So if I declare a war, I could just draft every single adult in the country, put them in the military, send them off. And if I lose the war, they're all dead, right? What's it do to the economy? The economy crashes, right? What's it do to the prices? Well, price of everything go up. If you want to create inflation, you do it a couple of ways. Either you cut the supply, or you cut the supply of the product you want to buy, or you increase the supply of the money that's available to buy it with. So if I make it illegal to manufacture food, the price of food's going up, right? I don't even need to print more money, right? I can create inflation just in a war, like in World War II. We have gas rationing. You have food coupons. Why? Because all the gasoline gets shipped off to Europe to put in tanks or to put in airplanes or put in ships. So when you have policies that are declaring war on something, you divert resources. So we had a war on COVID. We have a war on carbon, an energy war. If I decide I don't want you to burn coal or oil, then I drive up the price of energy. If I decide I don't want you to show up in your office, I drive up the price of production. If I decide that I want to fight this COVID war, and I'm going to change the way the economy works, then I'm going to drive up the cost of everything else. So we've got lots and lots of wars, right? You've got a culture war, you've got a war on office work, you've got a war on carbon, you've got a war in the Ukraine. The war in the Ukraine has escalated, right? It's not just a war in the Ukraine, it's really a kind of a quasi-economic war on Russia. The challenge with money is the fiat currencies that are used commonly as money, they're all broken. They all have a big hole in them. And
the big hole is inflation, period, end of story, or is there something else?
The hole is, we could call it inflation, but inflation is such a charged term because most people think inflation is CPI. The defect in fiat currencies is monetary inflation. It's the expansion in the money supply, not just the increase in consumer goods, because the CPI is it's a sub-metric, right? If you look at the US dollar, the supply of dollars has been increasing 7% a year for 90 years. It's been increasing 15 to 20% a year for the past 2 years.
Whoa.
Right? Right. So the big
idea. I don't
idea.
think that's true. So it seems worth walk us through where do you get that number?
Well, if you go back to 1930, my house in Miami Beach cost $100,000. And if you roll the clock forward to 2012, it cost $14 million. And today it would cost you $40 million. So it's 400 times more expensive than it was, 92 years ago. Now, if you back solve that, you'll find that works out to about a 6% or 7% annualized inflation rate, right? And if you go and you look at any kind of scarce, desirable asset, something that is you can't make any more of, you'll find typically they increase in cost about 7% a year normally. You can actually see, if you look at the market basket of things people want, like really good healthcare, really good education, a beach house in the Hamptons, artwork, Picasso's, right? That kind of stuff. That doesn't go up in price 1 or 2% a year. That goes up in price normally about 7% a year. And if you look at the price of a basket of stocks, like the S&P, the S&P has gone up about 10% a year. Well, the reason it's gone up 10% a year is because the money supply expanded at 7% a year, and then the underlying companies probably grew 2 or 3%, effectively. Gold isn't fixed in supply. The gold supply increases at 2% a year, 2 to 3% a year. So if you're on the gold standard, that means that the supply of money would be increasing at 2% a year, or otherwise doubling every 35 years. So money under the gold standard, perfectly executed, bleeds energy every 35 years. It's got a half-life of 35 years. But that creates stable prices, Tom, because the economy grows at 2 to 3% a year. So if the economy grows 3% a year, if the money loses 3% of its value a year, then everything kind of stays stable, right? The demand increases, the supply increases, right? That's a good situation. In that case, you can save your money, and 30 years from now, your money will be worth as much as it is today.
So, what are your thoughts about Michael Saylor's comments on gold versus Bitcoin debate? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.
A lot of traders are losing money on the falling markets, and cryptocurrency market is unpredictable, and the bear market could win over the bull market. So how can you earn profits in a bear market? Diversify your trading strategy by trading on Margex and utilize long and short positions. Welcome to Margex. It is a Bitcoin-based multi-asset trading platform. You can earn profits by opening long and short positions even in a falling market. BTC and other top cryptocurrencies are available at 10x leverage. There's no know your customer, and Margex has been nominated by Finance Magnets as the most user-friendly trading platform. Margex also features a killing MP Shield feature, and that's a system that protects traders from illiquidity and price manipulation, like the flash price crashes and the liquidate short or long positions often conducted on competitor platforms. Margex also gives you the exclusive bonus to try leverage trading without any of the risk involved. You can sign up on Margex in a minute using an award-winning interface. So to do that, just sign up on Margex. Make sure to use my link in the description below. Join the wallet section. Then you can enter my promo code in the promo code section, which I'll show you how to do that. You just hit use promo code and then go ahead and enter the promo code in that section. Then you get $100 free funds to trade and test your trading skills. Every Margex user can trade BTC, Ethereum, LTC, XRP, EOS, ADA, Uni, SOL with up to 100 times leverage. The minimum deposit is only $10 and the minimum trade size is $1. Margex users can pick between cross-margin and isolated margin for each trade. Cross-margin shares the trader's available balance among all open leverage positions that use cross-margin. To go ahead and open a trade using cross-margin, simply head to the Order Submission menu and click on the leverage method used, either using the pen or scrolling all the way to the left on the slider. As you can see, Margex trading fees are extremely competitive compared to other major crypto exchanges. The low fees are pretty amazing to behold, especially considering the MP Shield that makes trading much safer than other cryptocurrency derivatives and trading exchanges. In addition, it is possible to use 10 cryptocurrencies as a deposit position. Margex offers BTC, USDT, USDC, DAI, ETH, Link, WBTC, USDP, Tron, and Polygon as available collateral. So, what do you need to do? Let me remind you how the promo code works. Sign up to Margex using my link in the description. Join the wallet section, then enter my promo code in the promo code section. And then perfect. Get $100 free funds to trade and test. Thank you very much for watching this, and I hope it was helpful to you.